Good afternoon, traders. This is Joseph here from Eightcap. Welcome to this week's weekly wrap. So it's going to be pretty USD and stock heavy. There's some moves on the cryptos as well, but the key of it is going to be around the message from the Fed from the FOMC meeting minutes. So we'll just start with a couple bits of data that we did see during the week. We had the Reserve Bank of New Zealand met interest rate expectations with an increase to 4.25%, and that day as well we had the flush and PMI data from services and manufacturing PMI data out of the EU, France, Germany and the UK, and we saw mainly beats with data coming in above expectations, but the French services PMI did miss, and we also did see the US flush services PMI miss at 47.6. But really, just as we're looking at the euro here, so majority of the week has been around the USD's decline. We'll have a look at the index in a moment, but just looking at some of the majors to the US dollar, we can see all of these moves higher, and we can see the pound was the only one out of the three that made new monthly highs. We are starting to get closer to some of those July and August highs. We haven't quite reached them yet, so I do take that back. While we didn't see monthly highs, we have seen another move above those previous highs set back in July, but we failed to break the high that was put in recently on the 15th of the 11th, and it got close, but we didn't quite get there. Now we are continuing to watch this. If you have heard of a Indian diagonal, that shape is starting to occur, but that doesn't mean there's potential for the market to turn around too quickly. We are seeing a fair bit of resistance on the euro up around supply from 0.438, so we'll have to keep an eye on that area. And the Aussie dollar as well, we are seeing resistance just starting to creep in up at that 67.77 area, and that runs up to 67.96. So there's supply there, and there's a bit of resistance starting to form there as well. Now things haven't been as one way as we've seen from risk majors to the USD. So the risk to the Japanese yen, we are still seeing ranges. We saw a really strong move down yesterday that was cut very quickly by buyers, and we saw a very strong retracement going back up, and that was pretty much the story across all of them, and these sideways price patterns do continue. Pound, while it is still in a pretty decent trend upwards, it is in this small short-term range here. Again, we saw that move down, which was pushed up, and we've seen a failed rally today. So resistance at 168.26, and there is some short-term support down around that 167.67 area, but there is plenty of demand down to 167.30. So it's looking the best out of the three at this stage, but we would like to see another strong, confident move up by buyers just to show that this trend is going to continue. The Aussie yen is not looking, doesn't look like it has too much drive right now. We're really stuck between this 94.07 and the lower side 93.19, and the euro yen, we are seeing that resistance area at 145.60, and then we are seeing that support down at 143.89. So over to the dollar index at the moment. So we all did see that that recovery trend. Now we had a move down, and then that was all cut short very quickly as the FOMC meeting minutes showed that there is a chance that the interest rates that we have rises that we have seen could have been a touch overdone, and there is starting to be murmurs that we could see some rate rises will continue, but the size of those rate rises will be smaller. Now, dollar bulls didn't take this too well, obviously, and dollar bears got straight into work, and we saw a very strong decline with a move below what we had seen as a mini support area at 106. We have seen a break below that area, and we are seeing the price just starting to stagnate a little bit around this area here at 105.70. Now, there has been a fair bit of demand down to 105.16 with that single touch. At the moment, we are seeing buyers starting to come back into the market after yesterday and today. We are seeing the tail there, so we'll need to see if sellers can make one more move back down and break this 105.18. That starts to tell us that this trend is looking to continue. Right now, it definitely has shown signs of a continuation, but we still we would like to see a new lower low just to complete that series. So as we can see here, the lower high, lower low, lower low, lower high, and we'd like to see one more lower low just to complete that series. That would continue to tell us that the dollar is continuing to remain in this medium-term downtrend. So that major trend is definitely, that fast section here has been broken, and the medium-term trend section here has been broken as well by this move lower. But we may even see a bit of a move up in the consolidation before bears get the numbers back on again to really try another real solid push lower. So that's one of the areas we're looking at this week. Now, also, this had a cascading effect. Obviously, we've just covered the risk majors through the US dollar, but it also gave stocks a bit of a boost as well. And just looking at some of the key major indexes here, we can see the US 30, it finally broke out above this resistance area. We went up to that 34,257 area, and that is a direct test of the high that we set back in August. And it's a pretty good move, but we would like to see now any decline. The trend's definitely up. We can't really argue with that. We've seen higher lows, series of higher highs, another higher high here. And even if we did get one more move down, even if it retested this support area here at 33,526, as long as we saw another nice move back up that tested and broke that previous high, it's all healthy and looking good. Now the worry would be if we had a fast decline, a lower high, and a break of that support. Maybe if the market got back down to 32.5, that could be a little bit of a worry. But first we just have to see what happens on the next retracement, if that does turn into a higher low, and if we do see a new move higher that breaks that previous high, and then we'll be looking for this trend to continue. This is a really nice trend, and it just shows you there was a lot of bearish talk, there's a lot of negativity, but you can't really argue with this right now. So we've seen basically over 5,500 points added in this period of weeks. And like we said, we've seen that test of the August high. So on the weekly chart, for instance, we have had that one pullback and a break higher. So if we had another pullback and another break higher, then we really are starting to look to see if the market can back up to that 34.9 to 35 area, and then if we can get through there, who knows, we can even get up to levels that were previous highs back in 2021, which would be quite amazing. But definitely you can't really argue with what we're seeing here, and we'll just have to see if the rates do continue to to slow down, or if they are decreasing, and we do see that confirmed, if the market will continue to fight back with some of those losses we've seen here. So definitely some exciting times and things to keep an eye on stock indexes at the moment. And just quickly we'll take a look at the SPX and the NDX 100, which tracks the Nasdaq. So the SPX, which has a tech component, it isn't as strong as the Dow, but it's definitely got some good shape to it now. We've had that breakout, the support, the new breakout, and a test here, but we're still nowhere near those highs set back in August, and it's quite similar on the NDX 100 as well. We've seen the rally continue, but tech stocks have definitely been lagging the Dow component stocks at the moment, and it's pretty obvious to see here. But we are seeing now a bit of a decent pattern of trend, but we just want to continue to see higher highs form, just to show the buyers are in control. So over on some of the European indexes, the DAX is well and truly cleared that high set back in August, and if we do continue to see buyers hold on to this momentum, we're wondering if we could see a new test and maybe a break of that 14,619 or /20. And the CAC, for instance, which we did touch on a week ago, I believe, it continues to push higher, and we have seen another nice move above not only the August highs, but we're starting to get up here now to this price point back in April, and seeing some tests there as well. So let's zoom out there. So the next key high for the CAC was set back on the 29th of the 3rd, and that price point is 6,825. So if we do see a continuation, for sure, who knows, we could see a test of that, but we'll need to see the fundamentals and momentum remain in favor for the buyers, and we continue to see retracements turn into higher lows and new pushes higher to keep maintaining this trend structure that we are watching at the moment. So our the ASX as well has jumped above that August high, and we've gotten up and started to test the previous high that was set back in May. We're not quite to the peak of that high just yet, but we are in that general area with trade, buyers, comfortably trading and holding well, back above that, 7,000 area, and now we're back up into the 60 points. So again, we've all heard the doom and gloom, but we are seeing some really nice trends continuing to run on stock indexes. So we'll just continue to look for lower highs with new higher highs to show that this trend remains in play. And we'll quickly just touch on the Hong Kong 50. We had after some of the that extremely sharp sell-off that we saw and everything that was going on with Hong Kong and its the money leaving and etc. and it losing some of its status as a key world financial hub. We saw that really beautiful recovery rally. At the moment that has come off and we're seeing a bit of a base pattern after a break of that fast trend. So we would like to see this support and demand area hold at 17,474, and we would like to see a break of this mini range at 88 with a new push up to test the highs. If that fails to happen, if we do see a move lower, a break of this area here at 17,249, that could be a worry, and it could set off a new push lower that could be show us a bit of a deeper retracement. So we just want to finish on gold and oil, and then we'll touch on a couple of the bigger moving cryptos this week. So gold's had a good week. We also that leg up. We've been watching this this pullback here, and we're starting to see this move here. That was the FOMC when we saw that nice move up. The worry with gold right now is this move here is starting to lose a little bit of momentum, and we want to really do see buyers get back up there and test that 17.78 area. And we don't want to see another pushback down like to these areas and or below at 1734, because that really does start to give us some warning signs about the current momentum that is behind this leg up. So we'd like to see, if we do have a push down, we want to see a fast higher low and then move back up to test those highs there. So oil as well. So oil's had a pretty interesting week. We had a couple of real strong declines this week. We had that fast move down that set new monthly lows, and we had that real strong fight back that session. The day after we had a bit of a rally, and then we had another real plunging low. So at the moment, if you're on the short side, definitely oil does look inviting, but if you weren't in the market selling around this area, you want to be a little bit careful right now, because we've seen a lot of rejection from 76.54, and we can see again we had rejection even on that day that it did follow up with a plunge. That could be exhaustion now, but we really want to see support really well and truly proven. This could be a bull trap as well, and we want to see this area here hold at a minimum at 77.77 with a rally up, a new retracement, and then a new high that breaks this area at 81.66 to really say that possibility that this down move could be not only under pressure but starting to turn. At the moment it'll be a little bit dicey to try and jump in now. There could be even another fast run down to test this area before another fast retracement. So oil definitely needs a little bit more time to work itself out. It's definitely, in my opinion, and this is not trading advice at all, a little bit too late to be jumping on shorts just now, but again, it doesn't seem to have shown enough evidence to support trying to buy from the bottom just yet. So we'll be looking to see a little bit more evidence from both sides before we start really trying to work out exactly which way price is set to go. Now we just want to finish on some of the crypto coins. So we are seeing declines today on some of the major coins. SHIB is higher, Dogecoin is higher, but we are seeing declines on most of the top 5 to the top 10, and Ava, Solana, and ADA and Bitcoin, all over that 1%. Ethereum as well, close to 2% lower. Now we have seen some moves higher, but the worry is here is this point of resistance at 16,682. We are seeing a bit of a move lower. We want to see if buyers can defend this small move up over the last 3 days, and if that does finish lower today, if we do see some support come in and a new test and break this resistance here. Similar story on Ethereum. That resistance is seen at that 1,213 point, but things get a little bit tricky with Binance Coin. We saw that fantastic single day rally after a very strong rally. It really caught a few people, including myself, by surprise. It was an immense rally. We are seeing a bit of a pullback now. We think that momentum definitely is in the buyer's corner for now, unless we saw a real strong fast pullback down to these areas here. But yeah, Binance Coin definitely does look like one of the stronger out of those top 5 at the moment. And Solana as well saw a very nice push higher as well during this week. I still wouldn't jump onto Solana at the moment, just with its connection with FTX and how badly it was savaged when that all went down, and we saw a really, these days here there was just no volume in the market. Then we saw that move lower and then this pullback here. So there is resistance here at 1448, and we are starting to see a new test lower by sellers, but we'd really want to see a break of this level here, followed by a new move and a new higher low, just to really show us that buyers are in control. Because at the moment, all you can see is this real strong leg lower, and I'm not saying it's going to happen, but it wouldn't surprise me if we did see another real test down, just to test the conviction here of buyers. So that's some of the markets, some of our thoughts so far this week. I think the key out of this week is the message from the Fed. It's definitely a slight change in tone. We're used to a very hawkish Fed for the last few months, and we're now starting to see a slight change in their comments. And I wouldn't exactly say it's dovish, but it's definitely weakened that stance they've had, and we want to see if that can continue to drive risk markets. Stocks have definitely been doing fantastic, the stock indices, for the last few weeks, and we want to see if that can continue to continue. Surely we may see some pullbacks, but we just want to continue to see those higher lows, and we want to see buyers jump into the market again and just continue to push markets back up to test some of those previous highs. So tonight we don't have any key news coming up. There is a bank holiday in the US for Thanksgiving, and I think a lot of focus will be on the European exchanges tonight, and this general watch on the European markets is and how they're seeing the US dollar and some of the other currencies as well. So please make sure you subscribe if you'd like to stay with everything we offer from our guest analysts. And until next week, we hope you have a fantastic weekend and all the best for your trading. And if you are in America and you're watching, happy Thanksgiving Day. Thank you very much again for your time, and we wish you all the best for your weekend. Thank you. Bye.